Hello everyone and welcome to the third edition of Talking About Stuff. Today my guest is Mark McDonald, who's a financial advisor, and I would like him to introduce himself and tell us more about himself. Hi Mark.
Alex, hi. Thanks for having me. My name is Mark McDonald. I'm a financial advisor. I'm with Sun Life Financial. On a personal note, I live in Burlington, Ontario, in Halton region. I'm married with 4 children, 2 dogs. Fairly busy lifestyle that way. Got children who are involved in all sorts of minor sports, and myself too. I volunteer in the community with a couple of different minor sports organizations. Like I mentioned before, I'm with Sun Life Financial, and that's a little bit about me.
So Mark, what are your credentials?
My credentials, like anybody who's licensed to sell mutual funds or insurance, accident and sickness insurance in Ontario, I'm licensed by a couple of different bodies. The FSRA, which governs life insurance sales in the province, and the Mutual Fund Dealers Association on the mutual fund side. So from a licensing perspective, those are my credentials. I'm working towards my Certified Financial Planner designation. One needs a certain amount of experience in order to promote that designation. So now that I've achieved that experience, I'm working towards the CFP, Certified Financial Planner, and also the Chartered Life Underwriter designations, the CLU. So both of them are fairly well regarded within the 2 industries I work in.
All right, thank you very much. So you're talking about the experience. Can you share with us what is your experience in the financial planning world?
In the business, sure. So I joined Sun Life in 2017.
Okay.
So it's been 4.5 years now. So I joined as an advisor back in 2017. I've been in the business my entire working career, I suppose. So 1996 is when I graduated from Wilfrid Laurier University. I went to work at a mutual fund company in the call center to learn the business. Since then, I've worked for a very large insurance company other than Sun Life. I've worked for a consulting firm that had mutual fund insurance companies, banks as its clients. So I've been in the industry from a lot of different perspectives. I guess it's 25 years now since I started entering the business. So pretty varied experience, I'd say, and I'm happy to be focusing on the advisory side now.
All right. So with Sun Life, what type of products do you offer?
But products are certainly something we offer. I like to think of myself as a service provider who can connect people with products. So the products that I connect people with would be any kind of life insurance, accident and sickness insurance. By that I mean critical illness, disability. So any insurance product that's going to help you pay your bills or help your family pay your bills if you can't work or if you happen to pass away, unfortunately. So that's basically what I talk about on the insurance side. When I'm helping people with their investments and choosing investments and setting up a plan, I'm a licensed mutual fund advisor, as I mentioned earlier. But I can also connect people with segregated fund providers, term deposit providers, so like your GICs, et cetera, et cetera. So there's no shortage of products, I suppose, that I help my clients achieve their goals with.
Awesome. Okay. So if someone would come to you and like to choose you as their financial advisor, one of the questions could be what type of cost do I incur? Like what are my initial costs? What would be the answer?
Well, costs really aren't. That's not a big part of a discussion I have with clients. I mean, it certainly can be, but the cost part is fairly simple. If I'm talking to somebody about insurance products, there's really no cost that somebody pays me directly. So for example, if somebody purchases a term life insurance policy through me, there's a monthly premium they'll have to pay, obviously, and that varies. But there's nothing they pay to me directly. I'm compensated by the insurance company. And in many instances, if somebody is investing money through me, again, they're not paying me directly. They'll invest money with a mutual fund company, and my compensation is provided to me by the fund company. So at the end of the day, the client is paying me, but indirectly through the insurance or investment company. So it's a tough question to answer in a setting like this, but there's generally nothing that I bill clients directly for.
Okay, that's good. I think you pretty much clear it. So you're mentioning about the investment. What is your investment type?
My investment type, I don't necessarily know that I have a type. So when I'm meeting with a client, I go through a pretty extensive fact-finding exercise, and the point of that is to determine their type.
Yeah.
So I'll ask a lot of questions around when the money you're investing. When are you going to need that money? Is that something you're going to need in 5 years, 15 years, 20 years? That will help influence the investment style that I recommend. I'll also ask questions to people about their actual risk tolerance. If your investments were to decrease by 5% between now and next year, will that cause you to lose sleep? If yes, then we'll take a much more conservative style. If no, then that gives me leeway to recommend something with a bit more risk and growth potential. So, the style I recommend really depends on the answers to the questions I ask clients. I like to customize everything to them.
Okay, so related to this one, they may ask you what would be the performance that you can offer, or they can expect after they invest the money with you and Sun Life. I know it's not an exact answer, but
right. So I guess the best way to answer that question. Sorry, Alex.
Yeah, no problem.
I guess the best way to ask that question or answer that question is that will come out of the fact-finding exercise. So once I've gone through that process and determined what somebody's investment style is, then I can give somebody an idea of what to expect over the long term on an annual rate of return basis. So, I mean, we're not allowed to guarantee any results. We're not allowed to project anything necessarily. But if somebody like me, for example, in their mid-40s and they're looking to save money for retirement, and if they're in a balanced portfolio, you can have a reasonable expectation that portfolio is going to return between 5 and 6% over a 10, 12-year period. 5-6% per year.
Yeah.
Again, we're not allowed to guarantee any performance or anything like that, but based on past history, there's a reasonable expectation that you might be able to get that performance out of your portfolio. But then again, if you're taking less risk, you can't expect the same growth. If you're taking more risk, then maybe you can expect a little bit more growth. But it all depends on the investment style we're using.
It's all about the risk, I guess.
Yeah, exactly.
So are you able to handle smaller accounts for the family members that they're going to purchase through you?
Sure, absolutely. Yeah, I mean, there are some institutions that have minimum investment amounts before an advisor will take on an account. I don't necessarily like to operate that way. Because regardless of how much money somebody has to invest, everybody needs help, right? So people are coming to me from help. I don't really want to turn anybody away because I'm in the business of helping people. So,
So you mentioned at the beginning, but can you please so what are the organizations that you're regulated by?
The Mutual Fund Dealer Association is MFDA for short. That's the organization that governs investment dealers and the advisors who are contracted with them. So that's who I'm licensed by on the investment side. On the insurance side, it's the Financial Services Regulatory Authority. It's a relatively new organization, so I don't have the acronym memorized or the initialism memorized. But it's the old Financial Services. It's the old FSCO that renamed itself as FSRA. So that's the organization that governs the sale of insurance in the province. So.
All right. Thank you very much for clearing that. So what kind of clients do you service in general?
A fairly wide range, really. I would say most of my clients are the family market. So, husband and wife, or whether the couple's together or not, or if they're separated. But basically the family market. So, somebody who's looking to make sure that if he or she were to pass away unexpectedly, that their children would be taken care of in terms of education and support, and to allow a surviving spouse to pay their mortgage, etc. So that's a very common type of client I deal with, the family market. By the same token, those same people are generally looking for help on putting an investment plan together to save for retirement or to save for their children's education. So that's a fairly common client I have. But I also do work with business owners who are looking to set up a group health benefits plan for their employees, or a group retirement savings plan for their employees. So families, businesses, self-employed individuals too, who don't have health benefits and need coverage for themselves, et cetera, et cetera. So a few different clients.
So now we're going to talk about research. What type of research do you do when you activate those accounts?
Research, do you mean in terms of the investments I'm recommending, or product analysis
both,
of research
both,
on insurance?
Research in general, yeah.
So I spend a good part of my day or my week or my month, however you want to look at it, attending presentations by mutual fund managers. So there are companies that are very good at putting their fund managers in front of financial advisors like myself. So I can hear directly from portfolio managers what trends they're seeing out there in terms of global equity markets or global fixed income markets. And that helps me know the products I'm recommending quite well to clients. I'll know exactly what style the fund manager uses and what risks they like to help people avoid. On the insurance side of the business, I do a lot of work just on deciding what product would be best for the prospective client I'm meeting with, whether their insurance needs are mainly temporary, in which case I recommend term life insurance, or if they're looking for some estate planning or more permanent life insurance options, then I do a lot of work on deciding which of our products are probably most suited to this person. So I do spend a fair bit of my day, more so on the investment side. That's the side that requires more research and education, but I do spend a fair portion of my week or month, I guess, on that side of things.
All right, thank you. So if a family decides to go with you and at some point they ask you how much coverage do they need, how do you determine this part?
That's a great question. There's a rule of thumb that isn't always accurate, but more often than not I think it is. There's a rule of thumb that somebody should have between 8 and 12 times their annual earnings in term life insurance. Now that's a very high level rule of thumb that I like to go through a more thorough exercise to fine tune, but that's a pretty good starting point. So if somebody's making $100,000 a year, they should have between 800 and 1.2 million in life insurance. But what I do is it's a more thorough exercise. So I will look at exactly what somebody is earning. I will look at how much debt they have and how much debt they would want their spouse to be able to pay if they were to pass away. I'll look at the ages of their children and figure for how much longer their children are going to need financial support if something were to happen to the parent. So there's a lot of factors that go into the ultimate magic number, I guess.
Yeah.
But usually that magic number is between 8 and 12 times of 8 and 12 times somebody's annual.
Oh, okay, and then they can determine which range they want between this 8 and 12 if they want to go through that margin. Right.
So usually what I'll do is I'll go through the exercise to give them a more precise number in terms of how much insurance they need, and I'll also tell them what that's going to cost. So for example, if I were to say, Mr. and Mrs. Smith, Mr. and Mrs. Client, whatever, Mr. Client, you should probably have $1 million of term life insurance, and that's going to cost you $100 a month right now. Mr. Smith or Mr. Client can always say to me, well, I don't want to spend $100 a month, I'd rather spend $75 a month. So then I can tell them, okay, if that's your budget, then here's the amount of insurance that budget will buy you. So it's a very fluid process, I guess, when we determine how much insurance somebody actually buys. I'll tell them the ideal amount and what it'll cost. If they're comfortable with that, great. If not, we'll figure out.
But they can determine at the end what's the.
Oh, completely. Yeah. It's always up to the client. Sure.
And what is the term that you recommend for them to get this insurance?
Well, there's a few different term options available, anywhere from 10 to 30 years. It really depends on, if we're talking about term life insurance, it really depends on their age, usually.
Okay.
And more specifically, how much longer they plan on continuing to work before they retire. So if I'm talking to somebody, I'm 47, and maybe I want to retire at 65 or somewhere around
age,
there,
yeah.
62. What? So if I figure I'm going to be working for 15 more years, and I'd like to be able to replace a portion of my income if I were to pass away between now and 15 years from now, well, that's the term I'd recommend. That's the term I would buy.
Okay.
If somebody's younger, so if I'm talking to somebody who's 30 and thinks that he'll probably be working for 30 more years, well, then I'll recommend a 30-year term policy. So it's really dependent upon age.
I see.
There are other factors that go into it too, but age is the largest one.
And I know some clients can also ask if with Sun Life, do they need a medical exam because they may be smokers or like recreational drugs. So there can be some factors that can determine the exact type of insurance they want.
Yep. So in the old days, and by the old days I mean 3 years ago.
Okay.
So in the old days, Sun Life it was pretty much a given that if you were applying for life insurance, you were going to have to go through a medical. So by medical, I mean there's a battery of questions that Sun Life will ask you. And then on top of that, there was a nurse visit to your home where you'd have to provide certain fluid samples, etc. We don't need to, detail them all, but
so no blood samples or
blood and urine basically were the two fluids that would be collected, plus blood pressure, height, and weight, and all that stuff. Since, even before COVID, there'd been a movement in the industry to get away from that. So depending on your age, depending on the amount of insurance you're applying for, there's a very good chance that you'll be able to complete the application process just by answering the questions over the phone, and not having a nurse come to your house and go through the physical part of the examination. So I believe right now at Sun Life, if you're applying for less than $2 million, there's a chance you might not have to go through the whole physical. There's always a chance you will have to go through it based on your answers to the questions, but the industry is moving away from sending nurses into people's homes and collecting samples because it's for safety reasons and for efficiency reasons. So I don't have a straight yes or no answer to that question. It depends on certain factors, but generally the industry is moving away from that.
But basically people, they cannot lie about this because once they lie and they say they're not smoking but they are, you can determine that in case they want to get there's an issue with them at the...
Lying on a life insurance application will cause you problems, I can guarantee that, yeah. So,
so it's best to be honest.
Right, exactly. So so smokers will pay higher life insurance premiums, so I would understand somebody's motivation for wanting to hide the fact that they're a smoker, but you probably
maybe it could be a motivation for them to quit.
Exactly. And I tell people that all the time. I say,
it will help you with many things, including life insurance.
Exactly. Yeah. So, Mr. Client, your premiums are going to be $100, but if you quit smoking, they'll be $60, right? So, that's a conversation I have with a lot of people who smoke. But generally, there's nothing good comes out of being untruthful on a life insurance application, for sure.
I see, okay. And how about, there's a question, is there a surrender or a cash value in case, I guess, they want to quit within that term of the life insurance?
There can be. With term life insurance, no. Term life insurance does not build up a cash value over time.
Yeah.
Permanent life insurance, or sometimes people call that whole life, generally those types of policies will accumulate a cash value over time. So what people can do with that cash value, there's a couple of different things. You can sometimes use the cash value in your policy as collateral if you ever need to borrow money from a lender, a bank, or a credit union, whoever.
Yeah.
Sometimes you can use the cash value as collateral for that loan. Or sometimes if somebody just cancels the policy, they can just receive that cash value when they cancel or surrender the policy. So that's really something that only applies to whole life or permanent life insurance, but the answer can be yes.
I see. Okay. So what happens if Mr. Smith or Mr. Client become unhealthy during their policy?
Nothing really.
Yeah.
No, because when you apply for a life insurance policy, provided you've been truthful during the application process, the insurance company is assessing the risk of taking you on at that point in time. So considering your health at that point in time. So if somebody were to apply for life insurance, be approved, and then say be diagnosed with cancer or have a heart attack a year or two after, that really doesn't affect the validity of the policy. If the policy stays in force, it's still good. So yeah.
I see.
Yeah. Really the only, again, I don't mean to beat a dead horse, but really the only way I can think of that my answer would change is if somebody were untruthful on their application. So if they withheld the fact that they'd had a heart attack in the past or had high blood pressure in the past, etc.
Okay.
But if somebody's completely truthful on the application, health issues after the application will not affect the policy.
I see. Okay, thank you for clearing that. So, in terms of policy, what are the exclusions that are determined?
Well, that varies from company to company. Like I said, I'm with Sun Life, and really on a life insurance policy, really the only exclusion would be if somebody were to take their own life within within 2 years of buying the policy. That's the one exclusion you're going to see everywhere. But generally, if we're talking about a basic life insurance policy, that's really the only one somebody has to worry about. Again, as long as they've been completely truthful on the application. So,
all right.
I should have that tattooed across my chest or tattooed on my
Yeah,
business card.
always be honest.
Yeah,
Right.
yeah.
Okay, Mark. Now I'm gonna continue by asking, what are the guarantees that are included with the permanent life insurance?
Guarantees. So the first one would be if we're talking about your garden variety basic whole life or permanent life policy, and Sun Life has a few different versions of permanent life, but the simplest one, the one guarantee is that your premium will never increase. So however long you've set up the policy to have to pay premiums for, the premium is never going to increase from now until the end of that time. So that's the first one. We call that a guaranteed level premium, meaning it stays at one level.
Okay.
Another one is that the policy, if it's a permanent policy, it will never expire. So you're guaranteed to have a death benefit when you do pass away. The third guarantee built into our simplest permanent life policy is that there's a guaranteed cash value that builds up over time. And the amount you'll have at year 5, year 10, year 15, that's prescribed into the policy, that's in the contract, and that will be guaranteed to be there at whatever year we're looking at. So those are 3 guarantees on permanent life insurance policies. If we're talking about, I know you didn't ask about term life insurance, but I'll just throw that in there. So if somebody buys a term policy, same kind of thing. Their policy is not going to increase during the duration of the initial term. So if somebody buys a 10-year policy, a 20-year policy, their premium will stay at one level for that term, and it will increase after that if somebody chooses to keep it in force. But that's one guarantee that exists with term life insurance too. I
see. And you're talking about premium. What would happen if a client can't pay their premium? It will be the same thing as with a mortgage. What happens if you don't pay your premium at some point? There's some struggles in the family, so yeah.
No, and that's a fair question, and that's something that happened a lot during COVID. So, and actually, I'm glad you asked. Sun Life was actually pretty proactive at giving clients some relief on their premium, temporary relief on their premiums during that period. But now that initial and economic shock is over, I'll just answer your question for from now on.
For the future.
So if somebody had a life insurance, let's say somebody's life insurance premium was $100 a month. If we're talking about a term life insurance policy, you basically have 30 days grace. So you've got 1 month's grace to if you want to miss a premium, you've got a month to make it up. And if somebody wasn't able to make it up after that time, then basically the policy will lapse and cease. With permanent life insurance, that's a longer answer because somebody can borrow against the cash value in their policy to pay premiums. That's one option. Or they could take out a loan against the policy to pay their premiums until they're able to start making the payments again. So there's a couple of different options there. But yeah, people you generally have at least a month's grace to pay their premiums.
I see. Okay. Sounds good. So how often will you be in touch with the people after you close the policy?
I like to stay with insurance clients. Insurance is a lower maintenance type product. When people buy an insurance policy, they're not as concerned with ongoing contact with somebody like me as they are. They just want the coverage. They don't necessarily care about after purchase contact. With that said, though, I like to stay in touch with my clients at least once a year, because people forget, right? They forget what they have.
Yeah.
They buy a policy and forget about all the rules and benefits, etc. So I like to touch base at least once a year, just to remind them of that and go over their coverage, etc. And that becomes more important when somebody has whole life insurance or universal life insurance, because those are more complicated products that build up cash values, and with universal life there's an investment portion, etc. So it's always good to touch base on those aspects of the policy. So it really depends on what type of life insurance they have too. Term life insurance, it's a very simple product, right?
Okay.
You pay one premium, the premium never changes. There's no cash value. Really, people just have peace of mind that if something happens to them, their spouse or their beneficiary will receive a death benefit. But it's a simple product, so there's not as much contact required there. People don't need to hear from me every so often.
I see. Okay. So thank you very much for all the detailed answers. So my final question regarding this, the financial planning side, would be, what would be the best advice you'd give to someone that is looking to purchase life insurance?
Great question. So, couple pieces of advice. Don't procrastinate, because the older you get, the more expensive the policy will become when you choose to buy it. Not only that, though, there's always the risk of, if you're healthy right now, and you know you need life insurance now, buy it now. Because you're never going to have a better chance of being approved as you will today. Never say never, but generally your chances of being approved are best now. And the age piece too. So the older you get, the more expensive it's going to be. So, and I've seen this before, where somebody has put off buying life insurance, and then something happened to them health-wise, diagnosed with cancer, have a heart attack, or high blood pressure, whatever. That affects their insurability going down the road. So it's much harder to get life insurance with a condition like that as it is when you're perfectly healthy. So two main pieces of advice: if you're healthy, buy it now. So I guess that's my one piece of advice. Just don't procrastinate. If you know you need life insurance, get it done today.
All right, thank you very much for that. So now in the second part, we'd like to talk about what's going on right now. Everyone hopes that it's gonna disappear soon, the COVID-19. What were your first thoughts when you first heard about COVID-19 coming to Canada back in March, I think, last year?
That's a good question. You've asked a lot of good questions. My first thoughts, I don't even know, because it feels like it's been 10 years, right?
Yeah. It's been
but actually, so I was just listening to what people were saying. And by people, I mean everybody, friends, family.
Media.
Media too, sure. But everybody, and it's funny, I was just having this conversation with a friend last weekend. Everybody thought it was going to be 2 weeks, right?
Yeah.
Let's stay inside for 2 weeks. It's cold anyway. It's too cold to go out and do anything anyway. So let's just stay inside for 2 weeks, and then that'll be it. Well, obviously it wasn't 2 weeks.
That didn't happen. Yeah.
Yeah, that was my first thoughts, and then obviously I was worried for the health of my family, and the health of my friends, etc. But I don't think anybody. I certainly didn't realize it was going to be as big an issue, or as big a shock to our culture and our way of life as it has been. But yeah, originally I thought it was going to be fairly short term, and yeah, there would be a bit of a blip in people's finances and investment balances.
But then things going to recover and be back to normal, I guess.
Right, and I think we're slowly getting there. And in terms of
Yeah.
investments, I mean, that's been one of the most fascinating things I've seen anyway. And what I mean by that is how quickly people's investments recovered. And that's, you asked me earlier what my investment style is.
Yeah.
I don't have, like I said, I don't have a style per se, but I have one, like, steadfast, completely applicable recommendation is that do not panic. Especially if you're saving money for retirement and you're not planning to retire for the next 10, 15, 20 years, don't let a short-term downturn in the market affect your investment behavior. So when COVID first became a thing, we saw major stock indexes in the US fall 20, 25%. The TSX was down close to 30%, I think. And there was obviously a lot of temptation for people to pull their money out and just keep it in cash.
Yeah.
But the biggest surprise to me was at how quickly the market recovered after that. Like the last half of February and the first half of March were awful in stock markets, but people who were patient and didn't pull their money out, they were rewarded very quickly because we started seeing in the summer and the fall tremendous performance in equity markets, and people who were patient and held on to their investments benefited from that a lot. So that thought just came out of nowhere, but
Yeah.
I thought of it when you asked me about COVID. That drove home the point and the importance of remaining calm with investments, and don't let short-term things affect your long-term thinking.
All right. So we actually answered another question would be,
Did
how
I?
much did you thought it was going to last? It was only 2 weeks. It was very optimistic. Everyone hoped that, I guess, back in the days. But,
Yeah, I'm an optimist, right?
Yeah. So how did it affect your family, the COVID-19? Because I know a lot of people work from home. Probably is your case as well.
Yeah.
You
So
contacted clients, I guess, via Zoom or more than in person.
yeah. So business-wise, it really didn't affect me much at all because Sun Life was actually pretty good at allowing its advisors to pivot to an online environment or a virtual environment with client meetings. So we already had a relationship with Zoom prior to the pandemic. So I hadn't started using Zoom before, but a lot of other advisors had, and there was a relationship between the two companies and an infrastructure there. So as soon as the pandemic hit and it became apparent that virtual meetings were going to be here to stay, Sun Life set all of its advisors up with Zoom accounts and trained us very well on how to use the system. So it was a pretty seamless transition from in-person meetings to virtual meetings for me. How did it affect my family though, which is your question? I mean, I've got 4 children who were all in high school at the time.
Yeah.
And actually 2 were in elementary school, 2 were in high school. But that was a big shock to them.
Yeah.
Because they're all pretty social kids, and not being able to see their friends every day at school was a problem. But we're coming out of that now, and we've got 3 in high school, 1 in university, and the 3 high school kids have classes in person now, and that's been great. But sports were shut down, dance was shut down, all the activities that our kids do were shut down. So and everybody's family went through this. I get that, but that was tough to see because the kids struggled. I think things are better now. Dance, baseball, hockey, they're all kind of back online to some extent. So that's good to see.
Yeah, that's good. So I want to ask you, were you able to get the vaccine?
Yes.
COVID-19.
Yeah.
So you got both shots. Did you have any reaction or any issues after you take it?
No.
Because I did too, but no issues.
No issues. No. So I mean, you hear.
I know
stories.
there's some issues sometimes. Yeah.
People get a vaccine provided by a certain company, and there was 24 hours sickness, whatever. I didn't have any issues like that on either shot. No.
I see. So what is your advice to people also in this situation with the COVID-19? What do you advise them to do?
No, I don't advise. I don't give advice on that. No, I'm not.
You just let them their own preference.
Yeah, I'm not. I don't do that. I mean, I leave that to the medical professionals. I'm certainly not one of those. But
Nice.
I just know what my experience was. So
And for the last question, just wanted to ask you, when do you think the life will get back to normal, in your thinking?
I don't know. I don't know. Like I think what we're living with now, there's always going to be certain elements of that. Again, I wasn't born in 1918 when the flu pandemic was
And
around.
see what happened then. Yeah.
Yeah, and I mean, the pandemic ended at some point, but we still have the flu 100 years later. So I don't know. Are we ever going to get rid of this virus completely? Maybe not. Again, I'm not a medical professional, so I'm not comfortable making bold predictions. I just don't know. Yeah, I don't know if we're ever going to be out of this. To be honest, it completely out of this. I think we'll adapt and like we've been doing, and life is good.
Gonna
now,
get
so.
back slowly to normal. Yeah, because I was actually asking a friend back in the summer last year, so it was only like 2-3 months after, and he works in a bank, and asked him when he thinks, and he said, okay, I'll go by through what's going in the financial world, and a good point would be when would the aviation company recovered, and back in the summer of 2020. They say it's going to be by mid-2022. And I was a bit shocked then. But right now, over a year later, it comes more of a truth.
That's looking more accurate, maybe.
Yeah.
Sorry, you said an aviation?
Yeah, like airline companies.
Airline companies, yeah.
Yeah.
Okay. Yeah, who knows, right? I don't... I think for me anyway, it's been my experience that a very good way for me to look silly is by making predictions. So I don't do that. I don't do that very often because I'm quite often wrong.
Okay.
But I wouldn't be surprised if certain elements of our life today are here to stay. So yeah.
All right. Thank you very much, Mark, for coming today. Much
You're
appreciated. I'm gonna link your contacts in the description of the video.
Sure.
That's okay for people to get to contact you, get to know you, get a quote eventually,
Yeah.
and then. Be a win-win situation.
Yeah, thanks for having me. If anybody watching has any questions at all on insurance or investments, I'm a phone call away or an email away. No obligation conversation. I'm happy to have those anytime.
Perfect. Thank you very much, Mark.
Oh, Alex, thanks for having me on. It's been fun.
Okay. Looking forward for the next edition as well. Have a good day. Bye-bye.
Bye, everyone.